Hey folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Thursday, February 27th, 2014, and really a wild day today. Markets opened up and sold off just a little bit, testing the lows from yesterday, and you can clearly see that right down here. So right down here we saw a test of the lows, then the markets began to reverse. Volume is exceptionally light today, folks, and again, I feel like a broken record saying this day in, day out, but ultimately we've only done 61.6 million, and it's about 3 o'clock, about 2:45 at this point in time. So just super light volume. But interestingly enough, the markets have floated up, and now you're starting to see some profit taking coming in the markets. And again, multiple reasons to kind of extrapolate why this is happening. Number one, you could say that the institutions continue to distribute shares. The other one would be that the markets are following tick for tick the US dollar yen chart. And again, I want to bring that up here as we bring up the USD JPY chart on my software. And you can see that the markets have now just ticked down here on the US dollar yen, and that's coinciding perfectly with the SPY right here. So really some interesting price action. Those are the two key driving forces, in my opinion, to why you see selling later in the day. Now the question is, does it continue? Do we bounce up? And the reason why it's important where this market closes is because we're right around, again, for the fourth day in a row, the S&P 500 high from January 15th, 2014. All right, and literally right now, the S&P 500 is trading below that level by about 50 cents. That's it. So, I mean, we were above it at the highs of the day. Now we're back below it by just a small amount. And it really is an intriguing factor here to watch where this thing closes. And again, it's going to be really, honestly, a kind of a game-ending decision. The market's going to close, and we're either going to be slightly above it or below it. That's the way it's looking right now. And really, what does that mean? I mean, that's probably the bigger question, right? Is that a bullish sign, a bearish sign? Well, obviously, a close above is a slightly bullish sign. But what you want to do then is see if we confirm it tomorrow. And confirmation being a proprietary indicator, because there is some thinking, and I've talked about this with members, but there is some thinking that the institutions want to get that one final push of buying from the retail investor, where they would want to close it above those highs, so everyone in the media says, oh, they closed it above, buy the markets, it's going higher. You get that overwhelming sentiment, they get a new huge push of retail investor mom and pop money to come into the markets, and then all of a sudden that's where the pivot will be put in. So, I mean, there's a bunch of little cases here, a couple ways for you to tell whether or not that's the case. Zoom out on your chart and watch this high pivot right here. All right, basically on the S&P, I think it was 1858 and change. This high, which coincides on the spiders with this little high right here, if they were to get it above that as well, I think that's an even more bullish sign or a bullish case scenario, as opposed to just a close above, which could be a kind of a fake out type play. But at this stage of the game, I even have to tip my cap to the market. I've been a believer for the last week or so that we should be seeing a pullback, and you've got these small down days like yesterday, very minor, flattish type market, small down day, but it hasn't been that flush. Every time we come down to the level where it looks like it's going to flush, the market seems to get a bounce. And again, today, much the same as we saw the markets, again, yesterday get weak into the end of the day, make a bearish pattern. You tried to sell off this morning, came down to the lows here on the intraday chart, and then rallied right up. And again, the markets, again, I'd be interested to see after this week to see how much retail money has been flowing into the market. Has it been enough? I do know that Janet Yellen discussed things with the Senate today, and the markets generally liked what she had to say there. That was a small positive. And I do know that last week we saw about $10 billion from mom and pops flow into the market as well. Plus, I believe there was 3.5 to 4 billion in POMO today, which is permanent open market operations, which is generally what the Federal Reserve does to lift the market. So, you throw a couple $1 billion in there from the Fed, you throw some 2 or 3 billion from the average investor, and it makes it a lot harder for the markets to sell off. But ultimately, one thing I'll always say about the markets is when time is up, just a matter of when that time is up. So it's up to us to kind of just take it day by day at this point and just follow it tick by tick and really see what the signals are each day. And based on a close above or below the S&P 500, 1850.84, which is the high. That'll give us a slight bias, but I'm not going to be fully swayed until we see confirmation, and I really do want to see a close above the high from, I think this was Monday's high pivot right here. If we can get above that high, then I think then you have to really tip your cap and say, all right, this market could really squeeze higher now. Shorts are going to get squeezed out of the market. Okay, a couple stocks that I've been bullish on for quite some time, although I haven't had a position in, but JPM, I just wanted to bring this up. But look at the nice little pattern here on JPM. Good little double bottom support right there. You pierced it and then bounced. Beautiful little bounce right there. But then just a note here, the chart came up, pulled back. That's a bullish consolidation pattern, popped into double top, and is now consolidating again. So it's interesting to see if JPM can lead this market into the end of the day. You have a little bit of bullish consolidation here above the moving averages. Can we push up? Now, another stock that had big news was JCPenney. All right, you guys know how I feel about JCPenney. For the most part, I think it's a turnaround story. I think everyone's been way too negative on it. And sure enough, they reported earnings that weren't really good, but they were better than expectations. And sure enough, that kickstarted a rally in the stock, and the stock has moved up to the tune of 25% today. Think about that, folks. 25% move on the market. So big move there on that stock, and we'll have to see again if it holds and builds on it over the next couple days. I wouldn't say it's a buy here. What I would say is any sort of consolidation, small pullback is a buying opportunity from here on out, because there's too many shorts in the stock where any sort of small good news going forward will just kickstart another short squeeze rally, and there's enough shorts in this stock to really last for quite a while in terms of upside. So again, you can't pay up here, but any pullback I think you can pay up for once you get that pullback. Okay. Couple other stocks out there to note. One stock I think is worth noting is Dry Ships, DRYS. Nice move up towards the end of the day here, and that could be a signal that over the next couple days we could see some of the other shipping stocks rally. If we bring up the daily chart of the DRYS, you can see the stock's not a great chart on the daily chart, but if it can get above this wide range bar right here, I would say right above the 380 level, that would be the key right there. So you have the 50 MA right there. If it can somehow in the next day or so get above that, that should kickstart a rally in all the shipping stocks. And some of the shipping stocks are up today a little bit, but I would expect a bigger move if we can get that break above on Dry Ships. So Dry Ships up 5% today. It's not a huge move, but a solid move, and let's just keep our eyes peeled to see what that does in the coming days. All right, a couple other things to go over here. I just want to bring up the spiders again on the chart here, and spiders still remain up about 55 cents on the day. Really not doing a whole lot, but they have pulled back off their highs as we trade towards the end of the day. Apple is getting a bounce today, finally getting a bounce up about $10, broke through the 20 MA and didn't quite fill the gap right down here. Came really close though. You can see how close it came on the chart right there, and then sure enough bouncing back. And this was really the short of the last couple weeks right here that I called out. Gap fill from earnings, so you had earnings right here, and I go over this every couple days, but I think it's worthwhile going over. But you had earnings, and then the gap down because of earnings on the daily chart. And then what I said was basically there were a bunch of people that bought in. See how much sideways consolidation you had here on the chart going into earnings? So really what you have is a bunch of buyers there, and they were all holding the bag when it collapsed. So as it comes back up to that level, that's going to be a place where they're going to say, oh, I'm break even now, let me sell, puts in resistance, and that's why the stock trails off. Now you're starting to get just a reflex bounce as the markets are trading higher. NASDAQ's up about 19, 20 points today, so Dow's up 46. S&P's moving back above that key high right now. We're about 50 cents now above the closing high from January. So let's watch and see. And just to go back to that closing high again, one thing that makes me a little less, kind of believe in that high being a major level is the fact that I've seen so many people talking about it. Back 2 weeks ago, I was the only one, even 3 weeks ago, I was the only one really talking about that high as being a major pivot point, even going back to January where I called for the decline. And now we've seen everyone, I've even heard it on CNBC talking about it, which means that in general, it doesn't have as much importance anymore because you're going to get the little investor now to get very excited when we close above, which ultimately you're going to want to go the opposite way on. So, I mean, I'll divulge more on my thinking process to my members a little bit later in the daily analysis video in the research center, but right now, I mean, that's how I'm kind of leaning towards it. I want to see confirmation. I want to see a move above the highs from on the spiders if we move back to the SPY, above the highs from Monday, and I think at that stage then you got to say, all right, well, this market could go a little bit higher at that point, but right now I'm still skeptical even with a little bit of a close above, so again, we'll just take it one step at a time here. Okay, Lots of strong stocks out there. Small caps, again, doing okay. Not spectacular, but hanging in there pretty well. Just kind of scanning through here. Pacific Ethanol, big mover, up 50% today. That's a monster move. BIOF was up well over 100% today. They're both ethanol kind of producers. Alt Energy kind of related right there. Chinese stocks are doing pretty well today as well. MOBI up about 24%. DANG up 30%. So we're really seeing some nice price action on some of these Chinese plays, which could continue to be very strong in the coming days. All right, let me just flip back to the intraday chart here, and we'll just finalize things, just keeping an eye on it. And again, market's just above that level here. This seems to be the level right here. That I think I said that yesterday. 185.40-ish, give or take, is the key level on the S&P. That's what correlates to that high on the S&P. So we'll watch that into the closing bell today. Right now, again, the markets are trading just fractionally above it by a few pennies, really. And again, time will tell as we get towards the close. We're just about at 3 o'clock now. I'm going to bid you all farewell, get back to trading here in the afternoon session. But again, watch those key stocks we were talking about. Also watch the shipping stocks in the next day or so. If dry ships remain strong, there could be some trade setups there. Take care, guys. I will talk to you soon.